Everyone's panicking about real estate crashes while the smartest investors are quietly loading up in one state. Look, I get it. You're watching rates bounce all around, insurance costs are exploding upwards, and every YouTube guru is screaming about the next crash. But here's what they're missing. Florida just became the single best opportunity for build-to-rent investors in 2026, and I can prove it with actual numbers. I'm not talking about wishful thinking or outdated assumptions. I'm talking about 5 specific shifts happening right now that create a perfect storm for Florida real estate. These are shifts that most investors won't see coming till it's too late. So I've been operating in Florida's build-to-rent market for many years now, and what I'm seeing on the ground is completely different from what the talking heads are saying. In the next few minutes, I'm going to show you exactly why Florida beats every other state for investments in 2026, including the specific counties where the deals are actually going to be showing up. So here's what we're covering. The population math nobody's calculating correctly. Why insurance costs are actually creating opportunity. The construction advantage that's hiding in plain sight. The tax exodus 2.0 that's just beginning. And the one Florida market that's about to explode. Everybody knows Florida's growing, but they're using the wrong numbers. What's actually mattering here is that Florida isn't just adding 1,000 people per day anymore. We're adding 1,000 people per day who can actually afford to buy or rent. The median income of new Florida residents jumped 23% in the last 18 months. That's not the retirees, that's the new workforce. So again, not fixed incomes, we're talking remote workers from New York, San Francisco, Seattle, bringing their salaries with them. But here's the kicker, construction hasn't caught up. We're building 40% fewer homes than we did in 2005, but demand is 300% higher. Do the math. When supply can't meet demand from qualified buyers, prices only go one direction, especially in the workforce housing realm. And before you say, oh, but what about the old inventory sitting on the market? That's old inventory. Overpriced resales from 2021. New construction, affordable, different story. In markets like Ocala, Port St. Lucie, new builds, especially again in the workforce housing, they're getting multiple offers before the foundation's even being poured. Okay, so the big point that people keep talking about as well is, oh, insurance in Florida is expensive. As we've talked about many times, which Florida property are you talking about? Small, old, fixer-upper near the beach or a big, expensive home next to the water? You have to look to see which properties are they talking about because insurance rates have actually gone down. And actually, the amount of insurance carriers, well, there's been almost a doubling of the number of insurance carriers that have come into Florida just in the last 12 months. So that means that the smart investors are seeing this. The old investors of the old mindset, well, they're not even filtering this. They're still looking at weakness of 2 years ago, and they don't see the new reality. And so they're speculating on old information. Now, the serious long-term investors, they're seeing the actual numbers around insurance, the insurance dropping, the number of carriers available. Man, and that is really changing the landscape for people who are paying attention. So when tourists leave the casino, the pros clean up. Second, new construction gets preferential insurance rates. That's what we're here for. A 2026 build-to-rent property costs 40 to 60% less to insure than a home from 50 years ago. And why is that? Well, how is it built? What's the structural design? The hurricane standards for building changed in 2004 in Florida. That is very important to understand and know. Are there impact windows, reinforced roofs? Insurance companies love new builds because anything 2004 or newer has to be built on higher ground or stronger structural design. You can't avoid that. And the state just passed legislation requiring insurance companies to justify their rate increases. So that means with new carriers coming in, and the government stepping in to call a timeout on all these insurance hikes, there's going to be a great competition for lower rates, and that's going to be passed down to the investors who are in the game. The Wild West days are ending. Rates are finally stabilizing, but perception hasn't caught up with reality yet. I'm seeing investors lock in on insurance on new builds, for $2,400 a year on properties that rent for $2,400 a month. Run those numbers. The sacred money doesn't see it, but the math is beautiful. Everyone also talks about the COVID migration to Florida. That was version 1.0. Here's what's driving 2.0. California just announced another tax increase, and New York's discussing wealth taxes as well. Illinois broke. That means that money people are coming to a place they feel safe for the long term, and that starts with a capital F. And these aren't small adjustments that are making people of big money make big moves. We're talking about 5 to 10% additional tax burning on these high earners. But here's the part nobody connects. These people also need homes, and not just any homes. New homes, quality homes, rental homes. And what's interesting, not the Mark Zuckerbergs or other types like that are multi-billionaires buying $200 million estates. There are high wage earners that are a little price sensitive, but not very price sensitive. I mean, let's face it, they're coming from paying $5,000 a month in California for a 2-bedroom. You can give them a brand new 3-bedroom house with a pool for $3,500. Big changes. And why is this a big change? Well, the people coming in on the influx, well, they think they won the lottery. I mean, do the tracking. I'm tracking move-in data at our properties, and 67% of new tenants in Q4 came from these 5 states: California, New York, Illinois, New Jersey, and Connecticut. If you know anything about the average rents and what you get for what you pay for up there, man, it is a total game changer on how far the dollar goes and the type of property you can get. An average lease term, well, that's 24 months, average credit score over 760. And to continue, here's something the national talking heads miss. Florida has one of the most efficient construction markets in America right now. Labor shortage? Nope, not here. We've got crews from across the Southeast who have been building in Florida for decades. Permitting delays? Most counties streamline these processes post-COVID. In Lee County, we're getting permits in 3 weeks that can take 6 months in California. Material costs? Well, Florida's ports give us direct access to supplies, no mountain passes, no cross-country shipping. Lumber arrives in Jacksonville, concrete's made locally, labor's already here. The real advantage? Speed. I can go from land purchase to rental income in 6 to 8 months sometimes. Try that in any other growth state. Texas, 12 months minimum, even more. Tennessee, good luck with the impact fees. Nevada? Well, the infrastructure can't handle it. Speed equals returns. Every month you're not collecting rent is money burned. Florida's velocity advantage compounds every investment dollar that's brought here. So, of course, outsiders, they're coming in, they're chasing Miami, Tampa, Orlando. That's all I thought Florida had growing up in the Northeast. But smart money isn't really paying attention to those 3 big metros because it's a little bit topped off right now. They're looking at Marion County. Here's why Ocala is about to pop. It's got everything Jacksonville had 10 years ago: major highway intersection, room to grow, pro-business, local government in your favor, affordability. The prices still make sense. And another big trigger for that area, Amazon just confirmed a 2 million square foot distribution center there. Not announced, confirmed. They break ground this month, and that's 5,000 jobs minimum, plus all the auxiliary businesses around it. And the current median rent in Ocala, $1,450. Very affordable. In Jacksonville, average rent $1,950. That gap's about to close fast because I'm seeing land deals at $15,000 per lot, construction at around $140 per square foot, all-in cost for a 3-2 rental, $245. Market rents, $2,100 and climbing. Those are about 2018 numbers with 2026 rents. So look, I've given you 5 reasons Florida dominates for build to rent in 2026. Population growth with purchasing power, insurance creating opportunity through market filtering, tax exodus 2.0 driving premium renters from big states to here, and construction efficiency that beats every competitor market. If you want the actual data I use to analyze these Florida markets, those real numbers, not the hype, I've put together a build-to-rent Florida market report. It's got the county-by-county analysis, construction cost breakdowns, and the insurance strategies and numbers that actually work. Drop a comment below with your biggest question about Florida investing, and I'll answer them the best I can in one of the next week's videos. And if this opened your eyes to what's really happening in Florida real estate, hit subscribe. I'm dropping a new market intelligence update every week, so that keeps you informed without any of the BS, just the facts that can help you with your best investing.